Hello everyone, I hope you're doing well. This was the current scenario. I was low on cash and I didn't want to deposit more money to my crypto accounts, but I wanted more exposure to Bitcoin. However, I did remember I had some money in my retirement savings accounts with one of my banks. And I also remembered again that ETFs became available for Bitcoin in Canada and USA in the later half of 2021. So let's say you're in a similar scenario. You're thinking about whether you should buy Bitcoin in an ETF format, you should buy it in a pure Bitcoin format, or you're wondering if you should just hit the like and subscribe button. Of course, I'm kidding, but a subscribe would mean the world to me. And currently 99% of you are not subscribed, so I would just love to inch that up a little bit more, maybe to 2%. Well, thank you so much in advance. And now we're gonna walk through the pros, cons, and in-betweens of buying Bitcoin versus buying a Bitcoin ETF. Let's get straight into it. Let's start with the new kid in town, the Bitcoin ETF. These financial products were released in the first part of this year, and as we go through the pros and cons, I'll also outline how this financial product differs from holding pure Bitcoin itself. Now, the first advantage is price replication, and this is not necessarily an advantage per se, but ETFs do a great job of replicating the price movements of Bitcoin. For example, we can take a look at Canadian and American offerings of a Bitcoin ETF and seeing how it compares to Bloomberg's Bitcoin Spot Price Index. First off is Purpose Bitcoin ETF under the ticker BTCC.TO, and secondly we have Grayscale Bitcoin Trust ETF under the ticker GPTC. We can see that the price deviations are minimal, give or take a few percentage points, and we can accredit this to good management of the futures holdings in the stock, which overall are well done in the short time that they have been since inception. Now, the second advantage is centralized vendor regulation, and this is probably the most significant advantage of the ETF, as they're regulated by the Securities Commissions in Canada as well as the United States. This will surely give you the peace of mind that when you wake up, your money will be there. And this is surely something we take for granted in the traditional stock market space. And the third advantage is easy deposits and withdrawals. It's typically integrated with your current brokerage platform of choice, and if you don't want to open up a separate cryptocurrency exchange with Coinbase or Newton, Coinberry, Binance, or other crypto-focused platforms, that's no problem. Crypto ETFs are perfect for that. The convenience to buy stocks, bonds, options, and cryptos in one centralized area is definitely a big advantage for those looking for a seamless investing experience. The fourth advantage is holdings in tax advantage accounts, and this was the main driving factor in my personal case. Sometimes you would have cash stored up in your tax advantage accounts in Canada. That would be your TFSA, your RRSP, and RESP, while in the United States it would be the equivalent of a 401k and or a Roth IRA. By allowing you to buy an ETF, which is a regulated security, you can hold these assets in your tax advantage accounts, which again is a major convenience and makes the taxation process much more streamlined and incorporated in your monthly account statements without issues. Moving on to the cons of owning a Bitcoin ETF. First of all, you only get price exposure, but no asset exposure. And this is the main difference of owning an ETF, in my opinion, over owning physical Bitcoin itself. You have to understand that when you're buying an ETF, you're not actually buying ownership in Bitcoin, you're buying an ETF that has underlying futures to best replicate the price of Bitcoin. In essentiality, you're only the gains and losses in the price and market value of Bitcoin fluctuating over time, but you don't own Bitcoin itself. Just the price, not the asset. Now, the second is a byproduct of how ETFs for cryptocurrency are constructed. There's Contango and Backwardation futures risk, and we'll get straight into what that means. When you're buying futures, you're buying forward-dated contracts of the underlying asset, which in this case is Bitcoin. As there are holding premiums, which means that you have to pay more to hold an asset for longer, there is a slight premium called Contango in the futures markets, which means you may be paying slightly more to gain price exposure to Bitcoin over buying the Bitcoin itself. Now, the third con is that you're only linked to market hours only. Something that people don't usually think about, but Bitcoin, just like foreign exchange markets, trade 24 hours a day, 7 days a week. And this means that prices of Bitcoin, if it goes up overnight or on the weekends or on the evenings outside of trading hours, you won't be able to liquidate your position. And this is a factor that might be subject to manipulation by big whales or big market players who decide to make big moves outside of the market, which you will be exposed to if ETFs are the only way that you have access to your cryptocurrencies. Now, fourth is fees. There is a price to being centralized, and there is a price to fund management of the futures contracts of ETFs. And this is a summary of the fees of the leading Canadian ETF providers, for instance, and typically in the ETF world, the larger the fund, the lower the fees due to economies of scale. You could say this limits competition, but it's just the way it is in the highly competitive financial product space. And the last issue that I personally see is limited selection, as current crypto ETFs typically center around holding pure Bitcoin or pure Ethereum. Now, this is a problem because certainly there's other competitor coins such as Cardano or Solana or even Dogecoin and Shiba Inu that you might want to dig your toes in. You might want to take a risk and go beyond the top two. And if you ever do, ETFs are not there for you as of right now. Certainly, this will be eradicated over time as the ETF market for cryptocurrencies grows bigger, but for now, you're limited to a very small selection. Now we get on to the cryptocurrency traditionalist way of buying Bitcoin, and that would be owning the asset itself, whether buying through an exchange or keeping it in a cold storage. Whatever method you prefer to do, that's the way we're going to talk about right now. Now let's get into the pros of owning Bitcoin in the traditional sense, whether you're buying Bitcoin through a broker, an exchange, or a crypto exchange, or you're keeping it in a cold storage of your choice. Either way, let's talk about the pros. Now, the first is full asset exposure. There are advantages to owning the asset itself. For example, you can freely trade Bitcoin around exchanges, trade it with other cryptocurrencies like Bitcoin and Ethereum pairings or Bitcoin and Solana. And overall, you're no longer replicating the price similar to an ETF, but you actually own the underlying asset, which just by nature is more secure. In a way, this provides a level of flexibility you don't get with ETFs. You can also engage in transactions with Bitcoin, which means you can pay for something with Bitcoin just like you would with US dollars, or exchange Bitcoin to USD or Canadian dollars at your discretion anytime you like, and you can send that to any wallet address of your choice as well. And the second one is very simple. Full 24 hours, 7 hours a day, trading hours exposure. You're going to get exposure to cryptocurrency movements, which lets you transact if there are highs or lows outside of market hours, so you won't be limited at any time to be able to liquidate or add to your positions. And the third advantage is low trading fees. This one's not guaranteed, as Coinbase, for instance, has pretty high fees, but in general, cryptocurrencies through decentralized exchanges have lower trading fees than traditional banks. For comparison, here's Binance and other leading brokers' exchange fees, so what you can expect to pay through the leading brokerages of cryptocurrencies. Now, the last advantage is unlimited selection, and you get access to the entire cryptocurrency universe. This may be obvious, but you get every single coin available to you. With Coinbase, you have lots of coins available. With Binance, you pretty much have most, if not all, of the entire market. And this type of investment arena doesn't open up until you dabble in buying the actual asset itself, which is one big advantage if you're owning Bitcoin as an asset as opposed to an ETF. Now, there's definitely cons to owning Bitcoin, just as there are cons to owning a Bitcoin ETF. The first of which is the centralized exchange risk. In my personal experience, this is the biggest risk of owning Bitcoin. While Bitcoin and other cryptocurrencies are systematically secure by the blockchain, the decentralized exchanges where you hold your cryptocurrency is very non-secure. There's absolutely no guarantee that one day you wake up and your cryptocurrency is in your crypto exchange wallet. However, you can mitigate this risk, as I have personally done, by storing the non-actively traded crypto on a cold storage USB, such as Trezor or Ledger, which are the leading offerings of that. I'll put a link in the description below if you're interested. There's many videos on why this is a worthwhile investment, and I definitely share the same sentiment. Security is worth paying for. And the second disadvantage is that cryptocurrencies are not available for tax-advantaged accounts. Since crypto as an asset is not a regulated product like an ETF, you cannot hold or transact these assets in a tax-advantaged registered account. Therefore, you will have to transfer cash over to another crypto exchange, which adds an extra layer of complications to being able to purchase and sell cryptocurrencies. And that brings us on to our third issue, which is deposit and withdrawal complications. Unfortunately, depositing and withdrawing cryptocurrency is not as simple as a normal traditional bank. Every exchange has their deposit and withdrawal limits. For example, right now, Coinbase has a $300 Canadian bank transfer limit for transactions as of the making of this video. And typically, you're going to have to pay a fee for depositing, a fee for trading, as well as a fee for withdrawing back to your native currency of choice if you're looking to go from fiat, such as CAD to USD, to crypto and back. This makes things a little more complicated, a little more expensive depending on how often you do this, so take with that information what you will. Well, if you made it this far into the video, I really hope you enjoyed and taken away something for your personal investing journey. Another reminder to smash the like button and hit the subscribe button if you wouldn't mind, the little bell so you can keep notified for whenever I release another video. Lots of videos planned in the pipeline, and I've been working very hard to create those from scratch. What I personally think is that if you only want price exposure to Bitcoin or Ethereum, so-called the big two of cryptocurrency, and you only want to be tied to the gains and drops in the asset's value of the price exposure, then I think go ahead with ETFs. It's easy, relatively reasonable in the fee department, and does a good job of replicating asset prices, and is fully regulated so you have a peace of mind in all the accounts. However, if you're someone who's a little more invested in the crypto ecosystem, perhaps like trading more exotic cryptocurrencies outside of the top two, and prefers cryptocurrencies holdings over fiat currencies, and also maybe dabble in NFTs or DeFi programs that require cryptocurrencies as collateral, then there's really nowhere better to go than holding physical crypto instead. At the end of the day, I believe that a balanced portfolio should include cryptocurrency in 2021, especially if you're of the younger age group and have the benefit of time at hand. It's an asset class that's getting too big to ignore, and just like stocks and bonds, crypto might soon become a staple in the investment sphere. I'm just here to let you know the best avenue that works for you to buy it. With that being said, I hope you enjoyed the video. I hope you have a great day, month, and year ahead. Take care, everyone.